Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. Tuesday, February 24th, 2026. After Monday's AI panic, the market finally exhaled. We got a disciplined relief rally. Green screens, better participation, but it didn't feel like a clean conviction breakout. The story flipped fast, from fear of AI disruption, back to the AI CapEx winners, all while traders kept one eye glued to tomorrow's NVDA earnings. On the S&P 500 heat map, the first impression was simple, broad green, about two-thirds of the board. The bright anchors were megacap tech and consumer discretionary: Apple, Microsoft, NVIDIA, Amazon, Tesla. But it wasn't uniform. Semis sat right at the visual center. AMD and Intel lit up, while Broadcom and Texas Instruments stayed red. Energy looked like a drag. Healthcare was mixed with a clear Eli Lilly red, and staples were quietly green. So it's risk on, but with a little ballast still on the ship. That heat map translates into a very specific rotation. Money moved back into AI infrastructure and high beta growth after the disruption scare, with semis leading the build-out story. And participation really improved. Russell 2000 strength backed up the idea this wasn't just a megacap rescue. But you can see the caution too. Staples stayed green while tech ripped, and energy plus parts of healthcare lagged. So the market took risk, but it kept a hedge-like posture in the mix. Here's the tension underneath this bounce. A believable catalyst, AMD's Meta supply deal, helped reframe AI as a CapEx opportunity, and that unlocked risk appetite. But the tone still felt like relief, not euphoria. Even inside semis, the move was selective. Traders chased the torque, they didn't just buy the whole group. And the backdrop stayed edgy. Policy noise, trade war headlines, all sitting in the override, and the whole tape felt pulled toward one binary catalyst: NVIDIA earnings. On the more speculative edge, there was chatter-driven action too. Big Bear AI, BBAI, popped on talk around its upcoming earnings and the integration narrative tied to Ask Sage. To be clear, that's chatter, not a confirmed tape-driving headline. But it fits the bigger pattern today. Risk appetite came back, and some of the long-tail AI names caught a bid alongside the AMD-led reset. While you were watching the NVIDIA ticker today, a massive structural shift just cracked the software market wide open. We're calling it the Agentic Shock, and it's fueling a violent rotation into what Wall Street is now branding the HALO trade. It kicked off over the weekend, when Anthropic launched a new AI agent that can autonomously find and fix high-severity software bugs. The reaction was brutal. CrowdStrike and Datadog dropped around 10%, and IBM saw its worst single-day fall in about 25 years. Why? Because investors are suddenly realizing if an AI agent can modernize COBOL or patch security flaws in minutes, those multi-billion-dollar moats around legacy software giants are suddenly under siege. Now here's the pivot. The HALO trade. Smart money is fleeing bits for atoms. They're piling into HALO names, heavy assets, low obsolescence. Businesses a chatbot simply can't disrupt. Home Depot jumped about 3% on a pro-business earnings beat. You can't download a new kitchen. ExxonMobil is up roughly 25% this year. AI still needs a physical grid to run on. And the real winner in this tape? AMD. It surged almost 9% on a massive 6-gigawatt deal with Meta. This isn't just a chip story anymore. It's an infrastructure story. AMD isn't selling software, they're building the physical foundation of the AI era. So the 2026 trade is getting clearer. If an AI agent can do your job, your stock is at risk. If an AI agent needs your assets to exist, you've got a HALO. AMD was the session's headline engine. The stock jumped about 8.75% after a major multi-year AI chip deal with Meta, reportedly including performance-based warrants that could let Meta build a sizable equity stake over time. But the real story is what it did to the tape. It swung the AI narrative back toward build-out and demand visibility, and it helped pull semis and the broader market out of Monday's fear trade. NVIDIA still owned the attention. The stock added just under 1% as the AI complex stabilized, helped by sympathy from the AMD headlines. But the bigger angle here is positioning. The override now treats tomorrow's NVIDIA earnings as a binary event that can freeze decision-making. Today, NVIDIA is simply not breaking down while AMD ripped. Let the market read this as stabilization, not a fresh stress test. Microsoft was the stability anchor inside this risk-on move. The stock gained a little over 1% as megacap tech caught a fresh bid. And in a session like this, Microsoft really matters. It's the core AI platform bellwether. When it's steady to green, the rebound feels more believable, and less like a one-stock squeeze. Keysight was the loudest earnings signal of the day. KEYS surged more than 23% on strong results and guidance tied to AI data center demand. That matters because it broadens the AI story past the usual GPU conversation. Test and measurement is classic picks and shovels, and the size of that move told you investors were ready to pay up for clean AI-exposed earnings execution. IBM was today's real-time damage check. The stock bounced about 2.75% after a sharp sell-off the prior session on fears that AI tools could disrupt legacy software franchises. Today's move didn't end that debate, but it did show buyers were willing to fade Monday's worst-case framing, at least for a day. Supermicro was the uncomfortable divergence. SMCI dropped just over 5% even as the broader AI tape moved higher. When a key AI hardware name can't participate on a day like this, traders usually treat it as a warning flag. Either positioning is still unwinding, or there's stock-specific supply that group strength just can't fix in one session. Looking ahead, the near-term question is simple: follow through or fade. First, does the AI and semiconductor complex build on this AMD-led repricing, or does it hand it back? Second, software's still fragile after the disruption scare. Watch whether the app names can stabilize alongside the chips. And then the big one, NVDA earnings, the major near-term catalyst. On the macro side, the next big US data cluster kicks off Monday, March 2nd with ISM manufacturing, then ADP and ISM services midweek, and payrolls plus retail sales on Friday, March 6th. So the takeaway today was a truce. Breadth improved, and the AI CapEx narrative took back control, led by semis. But the rotation was selective, and the market still feels very event-driven. Next session, it's all about whether leadership holds, and whether this tape finally commits, or snaps back on the next headline. Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.